Welcome to the Melbourne Property Podcast, hosted by Sky and Lindsay Hammer from Convergence Buyers Agents, your local property experts.
This podcast is your go-to source for insights, trends and tips on navigating the ever-changing Melbourne property market.
Whether you're buying an investment property or your dream home, stay tuned for the next 30 minutes as we give you exclusive insights that will shape your next property purchase. Let's dive in. Hi, I'm Sky and welcome to another episode of the Melbourne Property Podcast. I'm joined here by my co-host, as always, Lindsay. Lindsay, how are you today?
Yeah, not too bad. Just trying to stay warm in Melbourne's weather. It's very windy here today, very true to form.
It is, yeah. It's definitely the winter is coming, that's for sure, here in Melbourne. So in today's episode, we're actually going to run through the most requested suburbs we get. So this has been sourced obviously through the podcast, but also through our socials. There just seems to be a number of suburbs that keep getting requested. Some of those I think are great locations, some of them not so much. So today we're actually going to do a deep dive on a few of those, talk through the data, talk through what we're seeing on the ground. Some of these markets we're not buying in at all, so we won't have as much to share, but we can explain why we're not buying in those markets.
And I'm also going to talk through the top 2 suburbs that I get requests for own occupiers as well.
Perfect. Sounds good. All right, as always, let's kick things off. What are you loving about Melbourne right now?
Well, some of our listeners may not know this, but I have been on the hunt for Melbourne's best bagels. So I lived in New York for many years, so I have a very high standard for bagels. And I think my problem in Australia is that lots of bagels are really bready, but also the ratio of cream cheese. So we just don't put enough cream cheese on our bagels here in Australia. Melbourne has a pretty good bagel scene. There's a few different options. But last week I actually found what I think is the front runner for Melbourne's best bagel, and that was Mile End Bagel. So I went to the Hawthorn one. It's just like a little food truck. But they've also got a Brunswick location, which I've been to, and one other, I think, Fitzroy. And I think it almost, hits the nail on the head for Melbourne's best bagel. So that was definitely a highlight for me.
Perfect. Well, we do have a few sponsors coming up in our future episodes, but yeah, maybe Mile End Bagels if you're listening.
Mile End Bagel, I love your bagels.
Very good. We'll have to get something in the studio for our next recording. I get some bagels in.
Do you have a favourite bagel type, Sky?
Yeah, I'm a classic like salmon cream cheese. That'd be my
On an everything bagel?
On an everything bagel, toasted everything bagel. That would be my go-to.
Yeah, it has to be an everything bagel.
But yeah, I've had a few, but yeah, nothing's jumped out at me so far in terms of bagels in Melbourne. I think I'm back to smashed avo and scrambled eggs, I think, over bagels. But having said that, my what I'm loving about Melbourne is a complete opposite this week. So for me, it's actually the opposite because I've just signed up for a 28-day challenge at the local gym. Part of that's just for motivation levels. Like, it is getting cold here. It is tougher to get out of bed at 5:30 in the morning. So sign up for a challenge there, and it's been good. I've enjoyed it because the gym that I've started going to, they know everyone struggles and they see a huge kind of drop off in people heading to the gym this time of the year. So glad I signed up. So far, so good. Have been going most days. So
what sort of things does the challenge entail?
I've had a few things. It's obviously how many days you go is the kind of overarching challenge, but they throw something in there. So if you do a 3-minute plank, you got an extra point. The fastest kind of rowing time in 2 minutes, or rowing distance over 2 minutes, and that type of thing. So did the plank, didn't win the rowing one, but yeah, I'll see what else is to come.
Very good. Good luck.
Thanks. Enjoy eating your bagels.
Okay, well, let's get stuck into this episode.
Yeah, so today's episode, we're going to run through a few different suburbs, as I mentioned, and these are the ones that we get requested the most. My one's going to be skewed, obviously, to our investors and people looking for investment, and you're obviously going to cover off a couple of others. Some are controversial, some markets we really like, but I wanted to pick one to start with, which is one of the more controversial ones, and that's Frankston North. So if you're not from Melbourne, Frankston North, similar to like places like Broadmeadows, a couple of other spots, it's called, say, Footscray, and there's a couple other suburbs I could probably chuck out there, but have always had reputation of lower socioeconomic, higher crime, drug use, whatever you want to throw in there as along the way, petty crime, all that kind of stuff. That it's definitely one of those suburbs. So traditionally, the percentage of investors, it's quite high in somewhere like Frankston North. It's always been affordable, so lots of investors getting into those markets. But wanted to cover on this one today because it is actually one of my favourite markets in Melbourne right now. When I post about it online, I always get a lot of hate of being like, "Oh, I never lived there. Like, you don't know what you're talking about." Again, I'm not saying you should move there tomorrow, but what I am saying is you should probably buy a property there. Obviously, you can take into your own financial circumstances and everything else.
I think that really comes back to, as well, something that we often say, that there's no correlation between things like crime rates and capital growth.
Yeah, I mean, like we've looked at the data and like crime rates do not correlate with capital growth. It's very weak. And yes, it does impact, obviously, desirability maybe to live there. And this is not just on Frankston North, but this is kind of across the board. But like places in Perth, places in Townsville that have kind of higher crime rates. We've tracked over time. It doesn't stop capital growth. If anything, what we've seen during the last few years, we're in this affordability crisis where interest rates are high, it's actually been the lower, median house price suburbs, or we can call them lower socioeconomic in some instances, are the ones that are outperforming the top end of the market. So I expect that to continue for at least another couple of years, particularly depending on where interest rates go. But obviously to kick things off, wanted to focus in on Frankston North. So I do have some data here I'm going to run through as well, but I've also got some comparable properties, and we're going to give real addresses of properties that I think people should go and check out if they want to see what's happening in the market. So Frankston North, we're now 39 kilometres southeast of Melbourne. It's a really small suburb. So even on Google Maps, if you bring up Frankston North, it is quite a small suburb, about 5,000, 6,000 people in terms of population. The median house price, now keep in mind this is lagging, is $614,000. So for us on the ground, we've actually picked up a property just under that recently, but I would say there's been very few sales in the last 3 to 4 months under $600,000. So realistically, I would be saying now $650,000, $680,000. That's, I would say, more where the kind of typical price is right now. Annual growth of just under 5% over the last 12 months, which again for Melbourne, that's actually quite good. We haven't seen too many suburbs at all that have grown over the last 12 months.
Well, I mean, if you follow the mainstream media for the last 12 months anyway, it's all been doom and gloom for the Melbourne markets, but like you say, markets within markets.
Yeah. And at this lower price point, we've definitely seen some growth. So a couple of properties to go and check out. So the first one's 33 Armada Crescent. Recently sold for $750,000 at auction in the last couple of weeks. Really interesting property. 3-in-1, unrenovated, brick house on 642 square metres.
And it went for $750,000.
And it went for $750,000. Like, to put that in perspective, like people were blown away. So this property, it had, I think, 130 groups through in the end. Multiple people that would have wanted to buy it. But again, not everyone's auction ready. So a lot of people that want to buy, they probably weren't going to spend that much money on it, to be honest. But it was one run by Mark Burke, I think, king of Frankston North. He sells a lot of property in there. Another one that I wanted to flag was 87 Brunning Crescent in Frankston North. It's a 3-in-1 unrenovated brick house. It also sold for $700,000. So again, 2 sales, 3-in-1s, over $700,000. So this market has moved. I mean, we are still buying properties in Frankston for cheaper than that, like 3-in-1 brick houses that need a little bit of work. But the thought of people saying, I'd never invest in Frankston North, aren't seeing what's happening on the ground. So as I said before, it's always been investor-led. Now there are so many young families getting into this market. So we're talking young couples with 1 or 2 children. They're moving to places like Frankston North due to affordability, and they're buying in there and they're driving that market. So there's some other suburbs, particularly west of Melbourne and north of Melbourne, where we're not buying for clients because it's investor-led. And we're seeing this in other locations like Darwin and even regional locations at the moment, that people are buying in these markets because they're chasing yield, they're chasing the next potential hotspot, but it's all investor-led growth at the moment. What we love about someone like Frankston North is that, there's still plenty of investors trying to get in there, including ourselves and our clients, but it's also lots of owner occupiers, and it's owner occupiers that drive up the prices over that kind of longer term. They're the ones that are emotional. They overbid and overpay at auction, as we've seen quite recently. So that's why we like buying in these types of markets, where it's a good balance of the two. It's not just investor-led.
I think one thing to note with 33 Armada Crescent that you mentioned went for $750,000. That was vacant possession as well. So that's something that I see Mark Burke, the selling agent, do quite a lot of as well. So when he's listing properties, there are no tenants in there. So that really opens up the market to investors and owner occupiers.
And it is something worth considering for like anyone looking to sell a property, is that if you can sell it with vacant possession, you're appealing to not just investors who can obviously get tenants in, but more importantly, to people that want to live in the property. We do see a lot of properties, well, not a lot. We see a lot of properties off market that have tenants, because you can't really sell that property to everyone, because a lot of people like in Frankston North right now are looking for a place to live in. So it makes sense to sell vacant possession if you can, because then, as you said, you got 100% of the pool looking, not just, I guess, maybe 30, 40%.
And if I just bring up that price guide for 33 Armada Crescent, it was high 500s to mid 600s. So it's gone for 100,000 over the top end of that price guide.
Yeah. And it's pretty consistent with the region, to be honest. There are people that might get disappointed with that, but I guess realistically, if you've done your comparables before going to auction or before submitting an offer, you would know that property was going to go a bit higher than that. So just something to keep in mind going forward. couple other things I wanted to flag. There was another property, and this comes back to, I guess, our process and due diligence and that type of thing. We had access to a property, 122 Rosemary Crescent, that was floating around the 700 mark. It actually ended up going to market and sold for 765,000. Again, it would have been probably 100 interested parties in that property. We decided not to buy it, even though we probably, again, this is all, I guess, hearsay now because we didn't offer on it for a bit cheaper. But that was because we did our due diligence, and you walk the streets, you go and check what's around there, and what backs onto that property is actually the Larging Housing Commission area of Frankston North. So again, it's not just one or two houses. Like it's like a mini estate of social housing.
20% of dwellings in that pocket near Rosemary Crescent are social housing.
Yeah. And so this one, the backs directly onto the property. So for us, we decided that's not a property we obviously wanted to buy for our clients. So we moved on to the next one. Beautiful property. And I'd recommend.
Nicely renovated.
Yeah. So we saw it. We got to see it before it had been renovated. So we saw it like when it was kind of not in all its glory. It needed a bit of work still. So I quite like the property, other than I guess where it was located in terms of that. So something to keep in mind, there are some streets I would definitely avoid in Frankston North as well. But for us, when we're buying property in Frankston North, it's house by house. We don't rule out any particular street. We don't rule any particular area out. It really comes down to the particular house, what's on either side of it, what's behind it, any building approvals in place, because like Armada Crescent, for example, we love that street and we bought a property off there off market recently because there's a whole suite of new townhouses and housing stock along there. It is gentrifying. I love that little pocket of Frankston North, but there's others that maybe you wouldn't pay as much for a property. You'd probably go a bit lower. So just keep that in mind, that you're not going to just rule out one particular street or section. It really is house by house.
What are some of the other data points like vacancy rate or inventory for Frankston North?
Yeah, so it ticks most of our boxes, Frankston North. So rent yield around just that low 4s, 4.15% at the moment. Inventory levels are currently at 0.8 months. And so when I say inventory levels, if you listen to our previous episodes, you might know what they are already. But if you haven't, basically, if the inventory levels for a suburb are, say, 2 months, what it's saying is that if no new properties were listed for sale, the current demand would take 2 months to absorb those current listings. So somewhere like Frankston North, we're at 0.8. It's basically saying in 0.8 months, all available stock will be gone if no new listings come up. So again, really tight market from both the supply side, but that's that really strong demand to absorb the current levels of stock. A couple of other ones. So vacancy rate at 1.36% for a suburb that does have quite a high investor-owned percentage. We're pretty comfortable with that 1.36. I'd expect it to stay similar, maybe creep up a little bit if a lot more investors get in. But because there's so many homeowners getting into that market right there, I'm not too concerned. Stock on market, 0.39%. That's really tight. That's some of the tightest in the country. Melbourne right now is at an interesting space where that stock on market number is around 1% in a lot of suburbs, but it's lacking the demand side because particularly the $1.5 million plus range. As for someone like Frankston North, it is not missing demand. It's got very limited supply, which is why we're seeing such strong capital growth in the short term.
Okay, I might run through some of the other sort of focus more on demographics. So the renter to owner ratio for Frankston North is 48%. Now, this is really one of the only data points for Frankston North that doesn't align with what we usually like to see for a good investment property. So what this means is that there's basically the same number as renters as there are homeowners or owner occupiers in Frankston North. We do, as you said, expect that to change just with that affordability factor and, more first home buyers moving into the area. So one to watch for sure.
Yeah, definitely. The ERSAD score as well is 1 out of 10, which is the lowest.
It's the lowest.
Yeah, you can get, which again, that won't surprise anyone. It's the same for places like I mentioned earlier, like Broadmeadows and a few others. So just keep that in mind as well. But again, we have no objections to buying in kind of lower socioeconomic suburbs if I guess a lot of the other the metrics stack up as well.
Yeah, that crime score there is 27 out of 100 as well.
Yeah, exactly. Yeah. So again, that's actually not too bad. So just to keep that in mind as well. So, all right, I think that's enough for Frankston North. Where do you want to move on to the other suburbs, or you want me to keep
I think
chatting?
we might move on to Carrum Downs, so 37 kilometres southeast of the CBD. It's a lot bigger suburb though than Frankston North, so population's around 20,000 people in Carrum Downs. What else can you tell us from the data side, Sky?
Yeah, so a couple of other points. So median house price now $720,000. Again, a lot of property selling above that, so just keep that in mind. But just to give you a ballpark figure of where it's at, lots of houses transacting mid to high 700s, low 800s. So again, we did pick up one at 720. So how much did we pay for that? $715 in the end.
4 and 2.
Yeah, which was obviously a really good buy, but that's not Yeah.
That's not typical.
Yeah, no.
Especially when in Frankston North you have 3-in-1s going for $750,000. When you look at Carrum Downs, which is a slightly more premium suburb than Frankston North, less of those sort of stigmas around socioeconomics and things like that.
Yeah, definitely. So annual growth, again, that 4.76%. So similar to Frankston North, this pocket of Melbourne has been growing and will continue to grow, which is what we want to see. The rental yield's around 4.19%. That is falling into the high threes for some properties, but you can get over 4%, which is great. Days on market, usually we want to see that number under 30 days. It's currently at 14. So instead of taking a month or 2 months like some other suburbs in Melbourne, it's taking 2 weeks. And realistically, what we're seeing that look like in practice is a lot less. So when we're buying property in Carrum Downs right now, if you're tracking the market, what's essentially happening is a property is listed online Wednesday or Thursday. First open home happens on Saturday. 60 groups through, multiple offer scenario. That property is sold by the Sunday, if not the Monday. So realistically, it's more of like a 4 or 5 day turnaround, but you obviously add some admin time on both sides. But really hot market, I would argue one of the hottest in the country right now. I bought in hot markets before. This is up there with the hottest I've seen over the last 3 or 4 years.
Why do you think that is?
Again, it's that demand from having like heaps of homeowners looking to get into the market due to affordability, but heaps of investors buying for the same reason. So like we've covered Frankston North, which ticks all our boxes except for probably that owner-occupier percentage. Carrum Downs ticks all our boxes plus more. Like every data point, it's lighting up like a Christmas tree. There's lots of green lights on this suburb. So I think that's why. So investors, particularly data-driven investors, which is becoming obviously borderless investors looking across Australia. They don't just buy in their backyard, they're looking everywhere. Carrum Downs sticks out to quite a few. And I've had people inquire with us and actual clients saying, like, why do you give out these suburbs? Like, why are you giving this out for free? Like, surely your paying clients would rather you didn't tell them. A few reasons why we do. One, good like buying in any of them, to be honest. Like Carrum Downs, we've only bought property off market. We've never bought a property in the last 4 to 6 months on market because it just doesn't make sense. You're overpaying or you're just paying a premium where if you wait patiently, the right opportunity will present. So like that one we mentioned the other day, picked it up, 740, negotiated a bit down after building a pest for a 4 and 2. Like that's the cheapest 4 and 2 that's sold in that suburb. We took out to wait 2 months to buy that property, but I'd much rather wait a few extra weeks and pay less than obviously just jumping in and buying properties that are listed on realestate.com domain. Not to say they're not good properties. There are some really good ones. There are also some really bad ones. I haven't got all those numbers in front of me right now, but there have been some really interesting sales in Carrum Downs, both to the upside but also to the downside recently. So again, it's very much house by house. So don't just rush out and use one property in a different pocket of Carrum Downs as a comparable to one and the others because there is quite different parts of Carrum Downs as well.
I've got a recent sale we can run through. So 42 Balmain Drive went for $811,000 earlier this month. It's a 3-bed, 1-bath, unrenovated brick house on 651 square metres of land. Now the price guide for this property was $650,000 to $715,000. So really it went for $100,000 over that price guide and it was one that was listed on the market. Did you get through that one
I did,
at all,
yeah.
Scott?
I actually went through that property for a client. Small, like a bit pokey, funny little floor plan. Like really good agent who has this property, or had this property. Again, that was that price guide fine. Like it's actually kind of where you would price it. But again, like I went through it the second open. They had I think, a midweek open where they had heaps of groups through, lots of offers already. I went through on this, I think it was a Saturday morning. I went through it. And within about 50 seconds of being there, I was like, okay, we're not going to put an offer in on this property. And not because it was bad, but because I knew that just because of the sheer demand on that property, it just didn't make sense to put an offer in. And I think we would have had it priced in the mid to high sevens. Like I would have been comfortable buying it there. But in the end, we just decided not to waste our time on this property because, I knew it would sell for a bit more than that based on the interest. So, really good sale. There's quite a few in and around Carrum Downs, around that 800 mark now, 3-in-1s, 3-and-2s selling about that price. So I think it's a market that will keep ticking up, particularly if interest rates come down because what we're seeing is a lot of people buying here aren't from there. The same for Frankston as well for homeowners. They're not necessarily living in Frankston. Like we personally know people that lived in Brighton or renting and are moving to Frankston to buy. Obviously they're spending a little bit more than the 800 mark, but we're seeing quite a bit of that where it's people that may be unfamiliar with the area, but they're not just going to pivot when interest rates come down. Like they're not going to say, okay, I've got an extra 50 grand of borrowing capacity. I'm not going to move 20 minutes away in suburbs. They're still going to keep buying into these suburbs. maybe have a bigger budget, and I think it's going to lead to some further price gains as well.
I would say it is important to check that social housing, especially if you are not from the area. So there's still some pockets with a high percentage in Carrum Downs. So near the Banyan Reserve, for example, there's a fair bit of social housing there. So definitely check it out. It's all freely available online.
Yep. A couple of other metrics, and as I said, Carrum Downs all looks really good. Inventory level 0.8, vacancy rate 1.82, so again sub 2%, so we're happy with that. And stock on market 0.21%, i.e. there is no stock, which we've already spoken about. The stock is just flying in Carrum Downs. So like speaking to agents, like their toughest job is getting listings because it's in a market right now, and again, we've seen this in other markets and suburbs where homeowners get to a point where they're like, well, I want to upsize. Like let's say that they own a 3-1 at Carrum Downs, they want to buy a 4 and 2, that then say, okay, well, I could sell now, but then I'm not going to be able to buy a place, or in this case, even rent a place in Carrum Downs until I find the next one because there's such little stock. So just keep that in mind as well. It's this kind of issue that I guess agents have. Like it's very tough to get listings right now, and some agents are getting plenty. There's a couple of agents that dominate the market. But yeah, then once they've got the listing, then it's a lot easier. There's so many buyers ready and on the sidelines waiting to buy that's the easier part. It's actually getting the listings is the toughest part right now.
And the building approvals are really low as well at 0.07%. So it looks like not a lot coming to market anytime soon.
Yep.
What do you think about if you look at Carrum Downs on a map on Google Maps, there is a bit of land around it. What have you got to say about that, Sky?
Yeah, so out to the east, like you've got Sky, Langwarrin, a few other suburbs as well that are, I'd say, newer estates, not like brand new estates by any means. And there is land out there for potential. I looked into this quite a lot, and even a couple of weeks ago, there's land out there for sale. So like there's still farming land out there for sale, but it hasn't been rezoned, and it doesn't look like it's about to be rezoned. So for me, and again, having seen this how it plays out in some other locations, I'd be more than comfortable buying now. I'm not expecting a brand new estate to pop up overnight. And even if it does, what we're seeing with building costs and how developers are building right now, you're going to be talking those 200-300 square metre type blocks, like new houses, sure, but they're not going to be the same types as what we're seeing in, say, Carrum Downs right now, which is bigger, older houses on like 700 square metres. Like a lot of people are always going to want that, and they're not going to want to live 5 minutes down the road for a brand new house on a block half that size. So it's a different type of asset, I would say, a different type of quality of asset that I don't think, as much as that starts popping up, I don't think it's going to change the market. I would much prefer to be in somewhere like Carrum Downs in an established suburb.
So you mentioned people buying bigger blocks of land in Carrum Downs. What sort of ways are there, like development upsides to those sorts of blocks? Yeah,
there are. So Carrum Downs right now, we're buying blocks for that subdivision potential. Like there's some clients we're borrowing, let's say a house on 3-1 on 700-800 square metre block with the potential to subdivide and add a second dwelling in the future. We're definitely buying those. They still don't make sense to develop right now. And you'll see, like, even if you just go to Google Maps and you look around Carrum Downs, you're not going to see heaps of houses that have been subdivided and that second dwellings there. In actual fact, there are some pockets of Carrum Downs where there are some, overlays where you can't subdivide the blocks. So again, keep that in mind. We've obviously...
Like Carrington Crescent, I know there's a big covenant over...
Yeah. Carrington Crescent is one of them. There's a covenant over some of the properties there, so just keep that in mind as well. But there's a few other pockets too. So there's definitely upside to do that. And we're doing it a lot in Frankston North as well. We're buying these houses with good size. We're speaking to town planning, getting that report done as well to make sure we can actually develop, but with no intention to develop tomorrow. It's more that kind of 3-5 year window to develop. So there's definitely that potential there.
Probably another thing to mention for those interstate investors when they are looking at these bigger blocks and they're thinking down the track they want to add a second dwelling or something is being really familiar with what's required in that local council for, site access and things like that. And that's where it comes in handy, having boots on the ground, I think.
It does, yeah. And a lot of people use the wrong terminology when they speak to us about that kind of stuff. And it's not any fault of their own. It's just Victoria's a different state. And if you're buying interstate, you might say one thing and it could be another. And it is quite different. So I guess overall I would say particularly Frankston City Council is actually quite a good council to work with, quite flexible. You can go back and forth prior to submitting for permits and that type of thing. I've done some stuff in Queensland and we've obviously got our own development in New South Wales, and let's just say those councils aren't always as good to work with. So in that sense, I think it's quite good, and we'll see a lot more of that development over the next kind of 3 to 5 years.
Very good. I'll just run through some other numbers here for Carrum Downs. So the ERSAD score is 3 out of 10, so obviously better than places like Frankston North where it's 1 out of 10, 1 being the lowest. Crime score 17 out of 100, also improved, better than Frankston North there.
All right, I think we'll jump into the next one. So this one I would say is one of the most requested suburbs I get, not through the podcast because we never talk about it because we're not buying there, but through social media and even through friends. Like obviously we've got friends that we've helped buy property for as clients, but we've also got friends of friends, and we do hear some horror stories of people jumping into some of these suburbs. And I don't know if we'll go into all of them, but for those that follow us on socials, and I don't want Spotify to have to put it on a explicit warning for this, but I recently did a video on the shittest places to buy property in Melbourne. And number one on that list is a suburb called Tarneit. It's in west of Melbourne. It's what we call like a house and land package, like capital of Australia. There are some other suburbs that do this as well. But there's a reason why we hate these suburbs for investment, because we're developers, they have those shiny brochures and the magazine saying this is an up-and-coming suburb, it's brand new, you're going to get these amazing depreciation benefits if you buy this brand new house. Buy this land for $350,000 today, and then you don't have to pay anything else until the development's done in another year or so, and that's when you pay the rest of it off. So, sounds kind of good, but what people don't see are the actual numbers on the ground. So in these reports, it might say there's $1 billion of promised infrastructure spending over here in the next 12 to 24 months. What they don't see is the vacancy rate's currently nearly 6%. They don't see that stock on market's like 8 or 9%. And these numbers are just dramatically higher and some of the highest in the country. So you're just not going to get capital growth. So we have had some poor people reach out and say, look, I bought this property like 3 years ago. It's going backwards. I can't sell it. I've tried to sell it and there's 50 other properties that all look the same. They're the same size block, same floor plan. My door was painted red, theirs is painted yellow or whatever it is. There's maybe one small variation, but they don't know what to do because you don't want to sell it. You've got no equity to go and buy another property. So do you pull the trigger and sell that property now, or do you maybe just hold on to it and hope for capital growth to occur? And obviously our job is not to advise on that. But what I can do, and as part of the education piece, particularly on platforms like TikTok and wherever I can spruik it, is just run away. For people that haven't bought there, look elsewhere. And so in terms of the numbers, and we can break these down right now, but the vacancy rate, which is another scary point, is 5.38%. Spoke about some of the other suburbs where it's 1%. In a lot of those markets, it's sub 1%. Like right now, Australia's going through a housing crisis, a rental crisis, yet the 5% of properties in this suburb are currently available to rent. We touched on this, I think, in last week's episode where we spoke about more conservative investors and risk-averse investors are the ones that are getting trapped into these scenarios because what they're doing is they're getting offered like 12 and 24-month rental guarantees by developers. And what that means is like, okay, I can buy this property and even if I can't rent it, the developer's going to pay me. For
red flag right there.
Exactly. It's a red flag. Even if I can't rent it, the developer's going to pay me for the next 12 to 24 months. Great. Sure, you got guaranteed cash flow, but if you think about it for long term, like you shouldn't have to buy a property where they have to give you a guarantee just for you to buy it, because what we're seeing is that after those guarantees roll off, and because obviously a lot of houses are being built at the same time, and then they're rolling off these guarantees at the same time. So you're getting 10, 20, 50 properties all looking the same, all without tenants. They're going up for rent and the vacancy rate's so high and so many other people are trying to rent these houses out that you can't get tenants in. So that's when people start reaching out and saying like, oh, I can't sell it. I can't get tenants. What do I do? So for us, we're obviously not buying in this market. Obviously, vacancy rate really high. Stock on market now around 5%. Building approvals are at 4.26%.
Wow.
Like, I think you spoke about Carrum Downs. It was like 0.2.
0.07.
Yeah, right. Okay. So now it's 4.26%. So again, not what you want to see. The other thing that's concerning as well is the holding period. So people that own property there, it's currently averaging around 6.3 years. That's really low. Like if you think about it, like someone that owns a property, right? You generally hold it, like particularly as an owner occupier, 10, 15 plus years, if not even longer. But we're seeing in these kind of investment trap suburbs, people buying property, selling it really quickly. So definitely a suburb we get asked about a lot. I have very strong views on these suburbs. There's not just Tarneit, there's others. There's Clyde North in the southeast. You've got Truganina kind of out west as well. You've got Highett up north. All very similar. Really high supply, really high vacancy rates. Lots of developers trying to flog off stock to investors that kind of get trapped into these kind of promises of depreciation and that type of thing. So if you can, if you're in discussions, maybe even right now, just take a look at some other options, established houses and that type of thing. Because what I haven't touched on though is the back end of all of this. So for us, we're buyers agents or buyers advocates. We only buy established property for our clients. What does happen is there might be some buyers agents you speak to who say, you know what, I'm only going to charge a 200, 2,000, whatever you want to call it, fee because I've got this perfect property for you and I'm not even going to charge you. I think you're a great person. So you know what, I'm not going to charge you anything else. All you're going to do is buy this house.
Red flag again.
Another red flag, yes. This house that hasn't been built yet. It's just a bit of vacant land, but I think this is a great investment. What you don't see is that they can't actually accept any form of payment from you. It's because it's getting paid by developers in the back end, $30,000, $40,000 kind of payments in the back end, but from a developer to sell that stock. So again, there's that conflict of interest. They can't be, I mean, some do, but they can't take from the buying side as well as the selling side. So again, another huge red flag if you're being sold this stock. And finally, again, this is what happens when I get stuck. We talk about these suburbs. I'm very passionate about it. But the other one, which annoys me a lot, which I see a lot, and we just saved someone from this recently, is that it's not just, let's say, buyers agents or developers you have to be wary of in this space. Mortgage brokers, accountants, these are all people that are recommending this rubbish to clients. We saw another recent example of where a mortgage broker recommended it. And again, it's because they got a $30,000, $40,000 payment if they had a client that bought the property. So there's all this stuff happening in the back end, which is why I like speaking about it as much as I can. But yeah, please keep that in mind if you ever get any of this kind of stock put in front of you.
I think if you didn't have the full picture, there are points that could look attractive. So like the gross yield in Tarneit is 4.23%. So if that was the only piece of data that you had, that would look very attractive. It's quite a high yield for Melbourne. But like you said, when you look at everything else, so the stock on market, the building approvals, vacancy rate, even the days on market, that's at 54 days. So you need to have that full picture to make an informed decision.
Exactly. And I can talk about these suburbs a day on end. I think I'll stop for now. But if you're interested in knowing more about those suburbs, check us down on TikTok because I've done a few suburb reviews on those as well because I just want to get that messaging out there of just have a second opinion or maybe see what else is out there before you sign up to one of these house and land packages.
All right. So stay away from Tarneit. Now we're going to talk through the top 2 most requested suburbs for our owner-occupier clients, and these are largely driven by families, and as I mentioned earlier, a lot of that is also driven by particular school zones, so people trying to get into really tightly held school catchment zones. You have to have a house within that school catchment or you won't be accepted, so it does make it quite a difficult place to buy in when there's not a lot of stock. So the first one I'm going to talk about today is Bentleigh. Know Bentleigh very, very well. Bentleigh is located 14 kilometres southeast of the CBD. It's on the Frankston line, so well connected to the city. I think it's about 20, 25 minutes. Median house price in Bentleigh is $1,625,000. That's actually gone backwards over the last 12 months, so not by a lot, by 0.61%, so about $10,000 less. So if you are looking to buy in the Bentleigh area, now is a good time, particularly as those interest rate cuts happen and we have more buyer confidence. People are looking to buy now that they have had those interest rate cuts. There's going to be more competition and that will drive up those house prices. So if you're looking to buy, while it's at the bottom of the market, now's a good time. Recent sales to note, so if you're looking to buy in the Bentleigh area, you'll notice there are a lot of those side-by-side townhouses, and they're quite popular with families because they're modern, they're spacious and really low maintenance. So something like that, if you want a 4-bedroom, 2-bathroom side-by-side, that'll set you back about 1.8 to 1.9 million, depending on the quality and the size. Median rent for Bentleigh is $880 a week and the gross yield is 2.82%. So I think you touched on that earlier, Sky, that these sorts of suburbs at that 1.5 million and above are not necessarily where we're looking for investor clients. That yield doesn't really stack up. So who are the people that own properties that are rented out in places like Bentleigh? Are they people who've owned the property for 30 plus years? And
yeah, it's been an interesting one to track over the last kind of few years, particularly with the introduction of the changes to the land tax. Like a lot of people own maybe 3 or 4 of these properties, and we're talking people maybe in their 60s and 70s. We saw a lot of that get sold off. So going back a couple of years now, when that land tax change come in and people went from having essentially zero land tax now into kinds of tens of thousands of dollars, a lot of that stock did get sold off. Like if you own one of those assets in Victoria, look, it's manageable. The land tax will be high, but it's manageable, particularly if you're getting capital growth alongside that. So yeah, I think like that's the kind of demographic we're seeing. But you also have people like, again, you have mum and dad investors buying one of these properties, or you even have some that are doing those developments. So they're buying an older rundown house on like maybe 600, 700, 800 square meters, knocking that down and building 2 of these types of townhouses, maybe living in one and then renting the other out, which is a pretty common scenario as well. So and quite a few people I think are buying those types of investment properties.
Okay. The days on market for Bentleigh, 43 days. So that's fairly neutral. Inventory, 0.75 months, and the stock on market, though, 0.61%. So whilst it may take a little bit longer than some of the locations like Carrum Downs and Frankston North to sell a property, there aren't a lot of properties that are actually for sale. So there's not a lot of stock on the market. And that's what I was sort of talking about. If you are looking in a particular school zone, like the Bentleigh West Primary School or the McKinnon Secondary, there's not a lot of options to choose from there. Building approvals are at 0.88%. So again, not a lot of new stock that's going to be coming to market anytime soon. What I do like about it though, the renter to owner ratio is 31%. So that's right in the sweet spot. That means only 30% of people living in Bentleigh are renters and the rest are owner occupiers. So again, that just has more appeal, particularly for families looking to buy. The ERSAD score is 10 out of 10, so everyone living in Bentleigh is very well advantaged compared to the rest of the population, and the crime score is 10 out of 100, so pretty good.
Yeah, and just looking at those numbers, you can see how it changes from, I guess, the suburbs are looking for an investment perspective versus maybe our own occupier clients.
And going back to what those suburbs are known for, so Bentleigh's known for having good schools. You've got Bentleigh West Primary School, and it's got what's known as an explicit instruction method, so that's quite sought after, and you can literally see the difference. Not the whole suburb of Bentleigh is zoned for that primary school. It's Jasper Road really is the cutoff, and so the houses on one side of Jasper Road compared to the other, you'll see a really big difference in the price there. There's also McKinnon Secondary, which parts of Bentleigh in the north, so up near Centre Road, are zoned for both Bentleigh West and McKinnon Secondary. It's really only a handful of streets, about 20 streets, and really, really sought after. It's a very family-friendly suburb, as you'd expect. Lots of parks and amenities nearby. So you've got like Glen Ira Leisure, the swimming complex. And it's really got a lot of Californian bungalows, so sort of those rendered brick homes that sort of came between World War I and World War II. They were popular in California and they made their way here due to like the influence of Hollywood at that time. So if you drive around Bentleigh, you'll see a lot of those older homes are Californian bungalows. They've got like a porch out the front and they're quite typical in in the area.
I don't have too much more to add than that, other than a coffee recommendation.
Yeah, what's your coffee pick in Bentleigh?
Little Z, just there on Patterson Road in Bentleigh. So not on Centre Road, but kind of the next main street down. Definitely go and check that out if you haven't already. Some of the best coffee in Melbourne. Yeah,
and they've got a little kids area at the back, I think. So you can actually kind of enjoy your coffee while the children just go off and play. Love it. All right, my next suburb I'm going to talk about is Highett. So this one's in the Bayside City Council, 17 kilometres southeast of the CBD. Median house prices in Highett are $1.4 million, and it's the second most affordable suburb in the Bayside local government area. Cheltenham is the most affordable. So Highett at 1.4 is, very popular with families. The annual growth, though, is going backwards as well. So down about 3% over the last 12 months, which is about $42,500.
Yeah, and pretty consistent with what we're seeing at that price point in Melbourne. Like I know I mentioned the other ones earlier that on that lower end have actually been rising, but for 1.5, I've definitely seen the market move backwards over the last 12 months.
Median rent, similar to Bentleigh, at $880 a week. That does bump that gross yield up, though, because the median house price is lower in Highett. So that yield is 3.27. So potentially if you're around that price point, 1.5 million or so, Highett would be a better option than Bentleigh if you're looking for an investment property. Days on market, similar to Bentleigh, around 42 days. Inventory, similar, 0.81 months. Vacancy rate, 1.43. So I guess you're saying, Sky, across most of Melbourne, we're seeing vacancy rates around that 1.5% anyway, so pretty common. Building approval slightly higher in Highett at 1.11%. Probably one thing that Hyatt's known for, though, it's close to Southland Westfield Shopping Centre there. So you've got one of the largest shopping centres in the Southern Hemisphere at your fingertips and lots of amenities on offer, and also on the Frankston line, so not too far to commute into the city.
Yeah, it has good transport infrastructure as well. So nice little spot, and obviously close to the bay as well. So no issues with living in somewhere like Highett, that's for sure. Yeah,
they'll also have the benefit in the near future of the suburban rail loop. So the end of the rail loop will be in Cheltenham. So they'll have access to that close enough to benefit from it, but not too close that they'll have the 18-storey high-rises right on their doorstep.
Exactly, yeah. And I think we'll cover those zoning changes in another episode as well, because I know we've had a few people, particularly our Sydney-based clients, asking about that, because obviously Sydney has gone through similar kind of changes over the last kind of 5 or 10 years, and it's obviously now coming to Melbourne as well. So very good. Is that all you wanted to cover off? You got any other suburbs you wanted to run through today?
No, I was just going to do the two. They're the ones that, a lot of our own occupiers, particularly families, are looking for. And I love working with families. They're my ideal type of client to work with. I'm a mum myself, so I totally understand those non-negotiables and what families are looking for. And I do some fun things. Like I love to get the kids involved when we do the strategy session for our own occupiers and sort of paint the picture of what their dream bedroom would look like. And you get some interesting stories there, but, just to really make it part of the process and make them feel involved.
Yeah, perfect. All right, well, I think that's it for today's episode. So thanks to everyone that did submit those suburbs through via whatever means. If you do want to submit some more, please do, because we'll probably do these not once a month, but every so often, just because there are suburbs that jump out. And like even going through like some of the requests we had, there are particular suburbs that always come up time and time again. These are the ones that come up now, but I know in 6 months' time it's going to be something completely different. So if you've got some suburbs you're interested in, please let us know. More than happy to do some more reviews on these suburbs as they pop up.
And what are we going to cover on our next episode?
So next episode coming up is going to be an interesting one, because we get a lot of questions around tenancy laws, all that kind of stuff, what's happening in Victoria right now. So we're actually going to bring in a property manager, a very experienced property manager here in Victoria that can talk us through what's happened, what's changed, what you should be looking out for, but also what's coming up, because it's not just done yet. There are some expected changes still to occur. So I'm really looking forward to that one. So I'm hoping it's a lot of value to everyone that's listening. That's a wrap for this episode of the Melbourne Property Podcast. Just a reminder that this information is general in nature and should not be considered financial advice. If you'd like to discuss your personal situation, book a discovery call with the team at Convergence Buyers Agents. Our link is in the show notes.
If you learned something from this podcast, hit subscribe and never miss your fortnightly dose of Melbourne property insights. Catch you next time, and happy house hunting.